Here is some really good news. Check this out. Twitter added 1.6 million daily active users this past week, another all-time high. It just keeps getting higher and higher and higher and higher and higher. There's one more thing that's looking very good for Tesla. We'll get into that in just a moment. But we really want Twitter to do very well. The faster Elon fixes and turns around Twitter, the faster he can go back to Tesla. First, they said that it's all because of elections, and then elections finished, and then another all-time high. I expect this to generally continue, and if that does indeed happen, then this is awesome. Of course, in the meantime, Twitter is going to do a lot of silly things. So do expect a lot of fear, uncertainty, and doubt with the media, but as long as the users keep going up, which is really the most important thing, like for Tesla, if I see profits going up, everything's fine. For Twitter users, that is the most important thing. You have users and you will make money. And here's another thing that is looking exceptionally good for Tesla. Tesla has not looked this cheap since March 2020. Here's March, and what happened later? Ooh, if you bought back then, you would still be up a crazy amount. At one point, it was much more than just 10 times. So is Gary implying anything? I don't think so, but what I do know is that Tesla stock right now is looking really good. And here's the latest report from Morgan Stanley. This is also looking good for Tesla stock. Why do we still recommend Tesla? Tesla is the only name we cover that generates a profit on the sale of EVs. The current price offers approximately 100% potential upside to our $330 price target, which is the highest upside to target we have seen from Tesla in over 5 years. That's from Morgan Stanley. You definitely want to take a look at this report. Check this out. Tesla sheds $500 billion of cap in 2 months. Tesla is approaching our $150 bear case, unlike someone else's $140 base case, maybe you could say. Driven by price cuts in China, decelerating EV demand, and other market currents, for example, Twitter and maybe crypto. And check this out, a value opportunity emerging. This is Morgan Stanley saying that Tesla stock, perhaps a value opportunity? Wow. Maybe those rumors that Warren Buffett is buying Tesla stock, maybe there is something to it. I mean, even Morgan Stanley is talking about value opportunity. And the continued weakness in Tesla shares has brought the stock to a 2-year low, back to levels near when the company joined the S&P 500. I remember everyone was so excited once Tesla finally joined S&P 500, and there was even more pain right before then Tesla did not join S&P 500, even though many people were expecting it to join. I think Morgan Stanley is really underestimating Tesla. Check this part out. They are only assuming a 25% growth in terms of units, the amount of cars that Tesla will be selling, which Tesla is targeting 50% year-over-year growth. So they are probably going to be extremely conservative. So if Morgan Stanley is saying that the price target is $330, and they only assume that Tesla is going to grow by 25% year over year with deliveries, do you think this could be a huge opportunity for all of us? And then in 2023, Morgan Stanley only expects Tesla to deliver 1.8 million cars and generate approximately $15 billion of free cash flow. Just for a moment, let's use Tesla's guidance and let's see how it would compare to Morgan Stanley's for next year. So Tesla has been saying that they expect deliveries to be just under 50%. To me, that would sound like probably 48%. But let's take a case where we are interpreting that in the worst possible way. I think that would have to be 47%. Mind you, these are not my estimates. This is just what Tesla would be telling us. All right. So we take the 47% number and then we multiply that. Tesla says they expect to grow deliveries by 50% each year. So we do exactly that and we get 2 million vehicles for next year, which is of course a lot more than Morgan Stanley's 1.8 million projected for the year 2023. Now, if Tesla does indeed deliver that, that would clearly imply that Tesla would beat expectations. And when that happens, we know what happens to the stock. Check this out, 13%. Whoa, that was a big beat though. And this is quite interesting as well. Feedback from last week's Asia Summit in Singapore suggests investor sentiment has turned sharply negative on the global EV market, particularly for China-exposed names. Growth in the supply of EVs appears to be surpassing growth in demand for EVs into a decelerating global economy. You know what that means? That means other companies are going to go out of business. And then they are already not able to make money. When the demand drops like this, they will have to lose even more money, because every time Tesla cuts prices or improves its margins and therefore cuts prices to offer a better product at a cheaper price basically to consumers, when that happens, others simply just cannot compete with Tesla. If you didn't watch that video from yesterday where Elon Musk explained for 20 minutes basically why Tesla stock is a buying opportunity, if you haven't finished that, you should finish watching that. But he said that manufacturing is Tesla's biggest moat, because their technology, their innovation is so far ahead of everyone else that no one, I don't think, is going to catch up to them for a very long time. And then Morgan Stanley presents what needs to change for Tesla stock to stop the slide. The main thing that they are pointing out here is to do with Twitter. Morgan Stanley says, we believe there must be some form of sentiment circuit breaker around the Twitter situation to calm investor concerns around Tesla. Now, if Morgan Stanley is right here, oh, and I'm going to love saying this, but prepare for many buying opportunities. But that is just all short-term noise. So long-term, I am not concerned, not even a little bit. Because for Twitter, the main thing that matters is users. Short-term, I expect so much noise. With Elon being the kingmaker in politics right now, bringing back a lot of people, some people really like those people and some people really hate those people. So it's very polarizing. But with that, I expect there to be a lot more noise. So if Morgan Stanley is right, and but Morgan Stanley is respected, but look, we all make mistakes eventually. With investing, you eventually make some mistakes, and the $10 case, well, that was admittedly the worst case, but this is before 2 splits. So split adjusted. This is under 70 cents per share. Under 70 cents. The thing that you get with institutions is usually they are very conservative, which, that's one thing that I really like. I am generally, when it comes to investing, I am generally conservative, But you have to keep in mind that I'm also young. So it might seem crazy that I only have Tesla stock in my stock portfolio. That's not a portfolio because it's only one stock, right? But also I have very strong income. And for me, I want to know what the downside is because Tesla stock is the only stock in my stock portfolio. I want to know every single thing that's wrong with Tesla stock. And those bigger institutions, they often are the ones to, nitpick things. And if they like what they see, that works for me. I mean, Morgan Stanley is all over Tesla. They think it's going to go up. So let's check what else Morgan Stanley thinks about Tesla. Why do they still recommend it? Obviously, Tesla is the only name that they cover that generates a profit before incentives. This is a very important part on the sale of EVs. Tesla is the only self-funding pure EV play, EV name that is out there, which I love that, and has achieved a unique position to secure supply of the necessary battery metals and related upstream supply necessary to produce EVs at multi-million unit scale. This is going to only keep widening and keep getting better, I believe very strongly. I mean, any other company goes to a battery supplier and the battery supplier just does not take them seriously. But Tesla comes to a supplier and they say, oh, we want millions of batteries, and now they are starting to take Tesla seriously. That is a big competitive advantage that many people don't see with Tesla. Morgan Stanley, though, sees it. So that's good. And check this part out. Morgan Stanley believes that in a slowing economic environment, we believe Tesla's gap to competition can potentially widen. What have I been telling you all for how many months now? When the times get bad, it's going to be much more worse for others. So even though it's going to be bad for Tesla as well, but it's going to be nowhere near as bad as for everyone else. So all the talk about competition coming, well, the gap is going to only widen during a recession. So here's one thing to really think about. Do we want a recession? Selfishly, if we are long-term Tesla stock investors. Short-term, of course, no, we don't want a recession. But if we think very selfishly, yes, we absolutely want a recession because that's going to crush all of the competition. Think about that. If you are really a long-term investor in Tesla and you want to hold Tesla stock until, let's say, 2030 or even just 5 years, let's go with that, 2027, 2028. How long is the recession going to be? 1-2 years? Okay. And then Tesla comes out of it with less competition than right now. This is actually a good thing for Tesla, folks. I think many people are not even thinking about that. I haven't really seen, have you guys seen anyone else really talking about that? That a recession is actually good for Tesla long term? Not short term, of course. Short term is going to get slaughtered, but the stock price, if we do have a terrible recession, it's not going to look pretty. So Tesla's gap to competition can potentially widen, particularly as EV prices pivot from inflationary to deflationary. Only Tesla is very profitable. So only Tesla can really lower prices by quite a big amount and still be totally fine. With respect to the IRA, which Gerber calls that the Tesla Enrichment Act, we believe, says Morgan Stanley, Tesla is by far the best positioned OEM in terms of potential eligibility for consumer tax credits up to $7,500 per unit. And then this is where it gets so insane, preposterous, ridiculous, ludicrous. $45 per kilowatt hour. This is absolute. I need to make a separate video about that, I think. This is beyond ridiculous, the amount that the government is going to be subsidizing Tesla this year. The current price offers approximately 100% potential upside to our $330 price target, which is the highest upside to target we have seen from Tesla in over 5 years. Translation, everybody? It's a buying opportunity. And look at that. Estimated free cash flow by Morgan Stanley of 2023. Only Tesla, you see the big juicy numbers. Everyone else looks really sad, which is, I believe, exactly how everyone who sold Tesla stock recently is going to feel sometime in 2030 when we look back and we're like, oh, I sold Tesla stock at 170 and now it's over $1,000. Oh, $2,000. What was I thinking? I think is what most people will be thinking. So when you hear Twitter noise, only one thing matters. Are the users going up? If the users are going up, Elon will figure out a way to make money. Just imagine what's going to happen when Twitter actually has good long-form video with an ability for creators to make money. No one makes money from Twitter right now. And they still have this many daily users? This is preposterous. By the way, I will soon be creating another separate channel where I will post a quick summary of all of the news and my opinions of that current day. That channel is not created yet, but it will be coming out probably this week. So look out for that. And these are 48 reasons why I only own Tesla stock in my stock portfolio. Like and subscribe if you haven't yet, and click on that video. I'll see you there. Thank you so much for watching.